The US administration has officially postponed its tariff deadline to the 1st of August, but sends copper prices soaring with talk of a 50% tariff. The RBA surprises by holding rates, and the Reserve Bank of New Zealand is also expected to hold later today. That's coming up in our 5 Things in 5 Minutes on Wednesday, July the 9th. And then in our deep dive interview, ANZ Head of Australian Economics, Adam Boyton, explains why the RBA's unexpected decision to hold rates doesn't mark the end of an easing cycle.
I think the Reserve Bank will cut in August. That will take the cash rate to 360. And then I think there'll be one more easing beyond that, which I've penciled in for November.
But first, in 5 and 5 with ANZ, the Trump administration officially postponed its reciprocal tariff deadline from today, July 9, until the 1st of August, to allow for more trade deals to be finalised. Meanwhile, copper futures surged nearly 20% as President Trump suggested a 50% tariff on copper may be included under separate sectoral tariffs. Here's ANZ economist Bansi Madhavani.
I think markets more generally are now thinking about the end game of this toing and froing of tariff deadline that we've seen so far. And I think the best case scenario in this instance would be the US being able to reach trade agreements with major trading partners ahead of this 1st August deadline, which will help not re-escalating any trade policy uncertainty. I think in terms of baseline expectation, we are still continuing to think that a universal 10% tariff rate seems like a reality. Some higher sectoral tariff rates seems like a new norm.
As of 4 a.m. Sydney Melbourne time, the S&P 500 was up 0.1%. The 10-year US Treasury yield was up 3 basis points to 4.42. Gold was down 0.8% at $3,315 an ounce, while West Texas Intermediate futures were up 1% at $68.61 US a barrel. The US dollar index was flat. The Aussie dollar up 0.5% at 65.29 US cents after that surprise rate hold, and the Kiwi is up 0.1% at 60.02 US cents. Number 2, the Reserve Bank of Australia held its cash rate at 3.85% yesterday against market expectations for a cut. ANZ Head of Australian Economics, Adam Boyton, says the surprise doesn't mark the end of the easing cycle, with an August cut expected.
It was an unexpected hold. One thing I would say is that we, of course, only see the binary decision, the yes or the no, the hold or the 25 basis point cut. And I suspect that around that, it was probably a reasonably finely balanced call reflected. And this was a first for the RBA in that vote count, with 3 members voting in favour of a rate cut and 6 members voting to keep rates on hold. So I guess the first thing I'd say is it was probably in the room a little closer than the binary outcome, of course, that we see.
Number 3, the ANZ Roy Morgan Australian Consumer Confidence Survey continued to rise, up 1.4 points to 88.6 last week, while NAB's business confidence also rose in June. ANZ economist Sophia Angala says expectations for a rate cut yesterday may have been a factor that drove improved financial and economic outlooks for consumers.
Looking across the sub-indices across the past week, it was the time to buy a major household item sub-index that only saw a decline. So that was likely just due to those end of financial year sales ending just at the beginning of the survey period at the start of the week there. But I do note though that the 6-point drop in the time to buy a major household item sub-index is still less when you compare that to one of our last major sales promotional events, the Black Friday sales of last year.
Number 4. Eyes are now on the Reserve Bank of New Zealand's rate decision at 2 p.m. Wellington time today. ANZ New Zealand Chief Economist Sharon Zollner and the market are expecting a hold at 3.25% before a further cut in August.
The data we actually think it's been pretty weak on average since May, but nonetheless the market hasn't really budged and isn't expecting a cut tomorrow. On balance, we think they will hold off, that they'll decide that actually they're best to wait for a bit more data on inflation expectations, and the labour market. They'll have all of that by the time they meet again in August. They'll have a full forecast round, so they probably think the cost of waiting is fairly low. But we do think the market is perhaps underestimating the chance that they will just take a punt, because after all, if you think you're going to need to cut, then why not get on with it?
Number 5. Sharon is still picking 3 more rate cuts between now and February.
But our take is that one way or another, this global turmoil and the tariff uncertainty, it will have a cost for our trading partners and therefore for our exporters, though exactly what that looks like is pretty difficult to know at this stage. But our overall forecast is that the consumer, in particular the housing market, they're going to underperform relative to the Reserve Bank's May forecast. And it might take a while for that to become evident, but effectively we think the committee will no longer be concerned about upside risks to inflation, but rather pivot to being concerned about the risk that inflation could actually be too low in the medium term.
Sharon Zollner there. Now, in our deep dive interview, ANZ Head of Australian Economics, Adam Boyton, analyses the RBA's decision to hold rates yesterday. He was talking to my colleague, Alex Tarrant.
As for what kept them on hold at this meeting, I think there were a few things. Firstly, the global downside risks look like they have receded significantly in the RBA's minds relative to what the Reserve Bank was thinking back in May. That's number one. Number two is the description around the labour market being both tight and strong. And I suspect that the most recent labour force data and a big jump in hours worked in that report probably helped the bank come to the view that the labour market was continuing to hold in. And then the third was really, it seems like, and this came through in the press conference, that the differences, if you will, amongst board members and the decision that the board took today wasn't really one about, are we ending the easing cycle, but more one that says, look, should we just wait another 5 weeks, get a bit more data, get the full forecast update from the staff, get the full quarterly CPI, and what do we lose by waiting for those 5 weeks and getting that bit more information? So I think they were the key three things.
What is able to sort of come to light over the next 5 weeks, do you think? Is it just the CPI data, or is it more certainty about the global situation, more certainty about the growth outlook in Australia?
I think it's all of those things. The more time we have to look at the global front, the more people can make an assessment about where US trade policy's at and what the implications of that for the global economy are. We do get a full quarterly CPI at the end of this month, which the RBA board will then have for the August board meeting. They also get a full forecast update from the RBA staff for that next board meeting. There will be another labour force print. We get one next week, and then there'll be some, I guess, the regular run of monthly data. But, for me, I think it's just a bit more time to assess the global, the full forecast update, quarterly CPI, and the all-important labour market updates.
And so what do you expect from here in terms of further rate cuts? Was there any guidance given in the post-meeting statement that leads you to think yes in August and maybe again? Or where's your thinking on that?
I do expect that the board will cut the cash rate in August, so I'm looking for a rate cut in August. And I guess that the thing today, that guide probably isn't the right word, but the thing today that suggests that that's more likely than not was that discussion around a question of timing, not a question of are we ending the easing cycle. So I think the Reserve Bank will cut in August. That will take the cash rate to 360. And then I think there'll be one more easing beyond that, which I've penciled in for November. And what I think we've also learned from the Reserve Bank today is that there is a preference for easing in those meetings where you have the full statement of monetary policy and the full forecast update. So if I think back to the rate cuts over the course of this year, we had an easing in February. That's a statement of monetary policy meeting. We had one in May. That's a statement of monetary policy meeting. The bank's surprised by not going today, but August is the next statement of monetary policy meeting. So I think we'll get a rate cut in August and then one in November, which is the final statement of monetary policy meeting for this year.
Adam Boyton there talking to Alex Tarrant. I'm Bernard Hickey. That was 5 and 5 with ANZ for Wednesday, July the 9th. Catch you tomorrow with reaction to the Reserve Bank of New Zealand's rate call today. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.